idea. Let's talk about options here now, since we were just talking about that. This is Facebook. We talked about the gap. It happened, seems like a million years ago, but it was only a month ago when the earnings collapsed. I'm calling it a beginner risk, but I'm using an average of $1,000 here for this, for the risk. Actually, I don't know why this says advanced risk. This should say beginner. So the risk is 1140. 1140. Cost is 380. 3 contracts. Risk is 1140. Sold at $12. Profit $2,460, which is a 216% return on investment. Let's take a look at the trade. It was Thursday, the 13th. Now let's go find it. We were in, that was January. Hold on here. I really have to go back. Here. I called the 330 puts. So I basically called it at the strike there. It was a little bit under it. So this was all the way back in January, actually before the earnings. The expiration date was 1/21. So what did it do? It dropped. Now, this is one example. Again, if you got out of this trade, it doesn't look like much. This was over 200% here. But if you take it over, you can see where it fell into 310. Now, I do not hold stuff into the very, 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 very last day of expiration unless I'm down in the trade. If I'm down, like the trade is bust, not worthless, then I'll hold into the last day of expiration because I have nothing to lose. I can't lose anymore. I'm already down. It could come back the last day. In this case here, I would get out of it before the last day, but I just want to show you that this did go further the last day. Again, I don't think that you should necessarily hold the last day, particularly if you are up a good amount, which you were in this trade. But this little tiny thing here, again, finding the bullseye, was a very profitable trade. It was a very profitable trade, but it was not even looks like much to you. Like this, you may be like, oh, that I can see. We did this here. Boom. It was a nice trade, and it even went further. It went down to 300 the last day. It would have been up the last day the most, but again, it doesn't make sense to hold it. Anyways, nice trade. So this is an option if you want to do it. You get the newsletters emailed to you. Time this went out was 10/17. Most of the trades I send in the pre-market, but sometimes I'll send them a little bit later. Netflix, what did we do with this one? We did, oh, the same day, same time, 520s. Let's go look at 113 Netflix. Here. So closed here, gap down, boom, called the puts. This is an exit here. Now I'm going to show you what happened after this. Let's just talk about the trade that was the real trade. So the 520 puts, an exit on Thursday, the 20th, was profitable. One contract cost $1,350, profit was $1,050, return on investment 78%. Now, why do I have this number here, and what is this whole thing here? I did not hold this trade into the earnings. I want to show you that if you did, you could have made what you could have made. The actual close on the Friday of the last day of the earnings of the option strike price of the 520 puts in Netflix that I had called a real trade that I did not hold to the last day, and I'll explain why in a minute, was 125. So you could have risked $1,350 and made $11,150. I did not hold it the last day. Why? Because the earnings were Thursday night, the 20th. It could have flipped around and the trade was profitable. It wasn't 100%, but I got done telling you, I think anything over 50% is a good trade. It would have been gambling to hold it into the earnings in a profitable trade. It would have risked the amount I had at risk. I would have risked the profit too. If the stock would have gapped up to 650, the trade would have lost. It would have had no more time left, and it would have never gone back down there anywhere to 520, because if it had gapped up, it would have been too far away. So if you held that though into the last day, you could have made a ridiculous amount, whatever the return in investment is, 1,000% or something. But this does show you though, the power of the gap and the power really of even earnings reports in reference to doing options, which you're gambling if you're holding a trade that you're up in. Now, there are times when I have held trades into the earnings. Why? Not this one here. Why? Because I was down. I had nothing to lose. I was already down in the trade. The trade did not go in my favor. It could work in my favor in the earnings, in which case sometimes that occurs. And therefore, then I get out. But the reality is when you have something like this, it's already up. This trade was already ready up. You got to get out of it. But this was an exit Thursday the 20th. So it was a week before I called it. Okay. But I mean, this just goes to show you how much money you can make doing options if you really want to. Let's talk about the SPY. Okay, we did some SPYs. 113 same day. We did the 471 SPYs, cost 340, 3 contracts is 1,020, risk sold at 24. This is a huge trade. So again, I'm averaging a risk here of 1,000, 6180, 606%. What happened? Same day I called it. We're going back to January. Take it up here. Wait, there's the guy. So here we are. It was around roughly the strike at the 471. Then we did this, and then we did this. Now here we are again. This is the 20th of January. Beautiful trade. It dropped down here, fell under 450. That's how it was so profitable. You would have made more. This is, I don't know what it was that day. So this is the exit the day before. You couldn't have screwed this trade up. It was just up, 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 up every day. And if you held it the last day, you could have made more. I don't know what it was. I didn't look that up. I looked up Netflix because that size of the gap was so big. I really wanted to see what the price of the option was. I did not look this up. But if you take it over here, it broke 440. So it's at least 30 points through it, even with any cushion in here. Again, not suggesting anyone should ever do that. But this was a huge return on investment to even exit it before the last day because of the fact the trade was up every day and just fell straight down. We were talking about momentum. We were talking about selling. Here it is. Boom. But again, fell the last day too. I get these questions. People are like, well, is that the maximum exit? No. There's many trades I get out and the trades still keep going. That's not the point of trading. My job is to find the best gap. Then I take the direction in the correct direction of the gap. Then I get very good entries. And then I look to make money. Whether you get out early, in the middle, wherever you get out with profit, you have more choices if you're in early to hold or split the position or whatever you want to do. It's impossible, I think, to make as your goal to have a perfect exit. Why sometimes we do have perfect exits. I'm going to go back to that one here. Now that I'm thinking about this week, this was a low of the day exit here in this BA. That day we did it. We had a low of the day exit. This was a low of the day here. Now I didn't know that at the time, but it was. So sometimes I will have a perfect exit, but I didn't in Netflix and I didn't in the SPY. So, you know, you do the best you can. I'm trying to think what else was I going to say. So you need good money management. Goals per day, per week, per month. Goals should be based on a risk unit, whatever it's going to be. And you can't change it all the time. You can't do 5,000 in Amazon and 1,000 in the SPY. No, because if Amazon loses, you have to take 5 trades just to come back break even in a good win in the one. You have to be consistent with your risk. You have to look at it by weekly goals and monthly goals. So that's what I would do. And if you have questions about that, you can always ask me. Getting back to what we were talking about earlier, though, you can make your own choices to make more money. You're not going to change the price of goods and services. You're not going to change world events. You're not going to change what's happening with politics either, that people are making decisions, what's happening with the world events. You can't change any of those things, but you are in charge of your own life and you are in charge of your own money. And you can decide if you want to do something different too, but it's going to take work. Nobody's going to throw anything into your lap. And I think people have got a little used to that, especially people that got the stimulus in the last 2 years. look at that as a bonus, as a gift. That's not real life. And it's not something that's going to consistently come to people. Just like you got to get up every day and you got to go work hard at your job. That is what it is. And if you want to get involved with trading, you have to do the work too. It doesn't mean you're going to work hard every day forever. It means you're going to work hard till you learn it. Or you're going to work hard to get the hang of it, or there's a cost involved, and just paying the cost is hard work for people, because a lot of times it takes people to wrap their head around paying for something when they don't know how much money they're going to make or how it's going to work, and they don't even know what they're doing. That's part of what it is. That's part of what trading is, taking risk. When I put a trade on and I'm taking the risk, I fully believe that I'm going to win in every trade. While I don't, I believe that I will, but it's part of taking risks. You put the risk on. That's why I use a stop. So I call the stops in the live room if you're in the room, and you put the stop in. If it gets stopped out, the trade loses. This is what part of taking risk is. I could have lost in any one of these trades I talked to you about here today. I didn't, but I could have. That's part of what trading is. And I think a lot of people want to trade and they're interested in trading, but they really are not honest with themselves about their ability to be able to take risk. If you have to do that. And I say, if you are scared and you're in a trade, then you need to cut it back, cut your risk back, do less trades, do one trade a day or something. If you feel yourself being nervous or jittery about what you're doing, if you lack conviction in what you're doing, you probably don't have a strategy at all, or your risk is too great. So back it off. Because the best thing you could do for yourself is to trade comfortably, not nervous. You don't want to be a nervous Nelly when you're in trades. You can feel that right now with people in the market. You absolutely can. I'm not trading like that, but I can see it when I'm watching how the market moves. Today was a great example of that. Again, we'll see where we close when I pull up the charts here in a bit. But success or failure has everything to do with the quality of your system. And if you don't have one, then you need one. So again, we talked about how do you become successful day trading. And again, I don't care if you do options or day trades, you got to have a good system to do it. And it's just not something that's going to fall into your lap. You have to learn it. It takes having a niche. For me, it's gaps. And specifically for me, it is shorting, but everything is based on reading institutional money that's in the stock and in the market. So if you come and learn from me, you would learn a 26-point ratings checklist. That pinpoints the direction of the gap. It's the footprints of institutional money in the gaps. That's how I made the call on BA. That was just a really good call. All the strikes that we did in that just went boom, boom, boom. And even as I was calling them, people were emailing me. I mean, they were shocked, and every trade worked, and people were shocked how everyone worked. You've got to look at what's happening, because the people that control the market are the people that have the money. Let's look at CVX. So yesterday, I don't have this chart in from today, but I know what it did. Yesterday, I called calls in CVX. It popped up today. It gapped up today. It worked. It ran right up. I called the 160 calls today, and yesterday, and then I called the 170 calls today. They both worked. They both worked. We can look at this chart. Again, momentum. 1, 2, 3, 4, 5, 6, 7. Today was the 8th day. It ran up here, flew over 172. I don't know where it closed. It doesn't matter. So we played it. It worked. So this was we did calls. Okay. What do I mean by institutional money? This is getting bought. It's getting bought. I mean, full stop. It's, again, this is an oil stock. What do I mean by institutional money? Facebook. Facebook has been selling off. Okay. And again, started here, fell off a cliff, even though we did this prior to. Again, I don't know where this closed today, but this has broke so many numbers, 300, 200. So how do I figure all this out? Before we get in the position, I rate it. Gaps are an event. It creates a sense of urgency. Hurry up. It could be buying, it could be selling. Again, I prefer to short, but I will go long. I went long to CVX. And action is being forced by participants of the stock, people that are already in it. And that is why gap trading is incredibly powerful. So trading is, trading gaps. So specifically, I called my class, and the way that I rate them, I called them golden gaps, because it's like finding gold in the market to find something to do that has such a big move and to happen so quickly. But the fact is, it's trading with power money. That's how you can make money. You've got to make good choices when you trade. I do not find that trading all over the place and doing a million different things is the way to make it in this business. You have to have a solid system. If you don't, that's probably why you're losing, if you're losing. or maybe you're risking too much, or maybe you're over trading, or maybe you're buying the dip and that's not working this year. But I don't think it would ever work as something to consistently do, and consider yourself lucky if you did it last year and it worked. Some of the stocks are still holding. Some of the moves that people were in them as swing trades. Will that last? I don't know. To ask me where I think we're going to be by June 1st is asking a million things. It's a lot easier for me to tell you where we're going to go in 5 minutes to take a trade and get out, or tomorrow morning and take a trade and get out, than it is to tell you where we're going to be 3 months from now. That is neither my concern. We are active traders. We are chunking it out. Like I said, we are pulling money out. This is income trading. This isn't long-term investing. It's very difficult to see. It's like saying, well, who do you think is going to win the election in 2024? I have no idea. I don't even know who's running. Is Russia going to take over Ukraine? The probability is high, no matter what they say about not want to be involved with NATO. The probability is still high that Ukraine will fall to Russia. And what will that mean for the rest of the world? Nobody knows. Nobody knows. So you can only control and predict the things that are in your universe. And the short term really is the way to make money. And again, I go back to the same thing about chunking it out. So the system, if you want to come and learn from me, my system is how do you make money in the market? You're going to trade golden gaps. You're what to trade? Gaps that rate 20 points or more per the system. I'm rating them on 26. I don't need a perfect score. 20 is good. I get them early in the morning. You saw some of those options were early too. Sometimes I call them in the pre-market. We can't trade options till after the open, but I get them when they set up and trigger, and we go. So it's about good choices and having a plan of action and chunking it out. I think you could make, like I talked to a guy yesterday, he said, I'd be happy making $800 a week. I said, okay. And then I said, how much money do you have? This is how much you should risk. This is what you're looking to do. Take what you have and then back it off and figure out your goals from there. That's how you're going to get somewhere with it. Instead of complaining and saying, I wish I had this, or I'll wait till then, or whatever. You know, the future never comes unless we create it. We have to take actionable steps, like I said, to be able to create the goals that we want. And sometimes that means work. The nice thing about trading is we don't trade on the weekends. We got weekends off. So you're going to work during the week, in between your job doing options, or in the morning day trading for the first half hour of the day. But I'm the one that's doing the work when I get up. I rate the gap for the options newsletter. The newsletters are emailed to you in live time. You don't take a class for that. If you want to sign up for subscription, you just sign up. For the day trades, I'm also doing the work, rating the gaps in the morning. I get up super duper early. And I'm the one that has the conviction, the confidence, but you should learn to get this yourself, because you will trade better. You will trade better. And people are consistently worried in this type of market because there's been fake outs. Something fakes higher, something fakes lower. Again, BA is a great example of that as well. But you do have to have money management. We've been talking about this the whole time. You have to set a risk. It should be consistent. You shouldn't be afraid to use stops either. And again, you have to have more winning trades than losing trades. You won't make it. You just won't if you're losing more than you're winning. It's great to have some big winners, and we have had some of those this year. But in general, I'm just looking for consistent wins. But every once in a while, we get a big winner, and then that's nice. And it certainly makes up the difference than to cover the 2 or 3 that we lose. But it is about quality for me, whatever your goal is, whatever you want to earn. And again, it depends where you live, depends what your lifestyle is, depends what you're doing. If this is extra money, if it's full time, whatever you want it to do. And we did talk about this earlier, the return on investment versus return on risk. It's different for options and day trades. Okay, again, because if you look at some of my day trades, you say, oh my God, that's 1,000%, return investment. It's not really, because the cash that you need there. But I could take a day trade and I could risk $2,000 and I could make 6. I don't look at that as 300%. I look at that as 3 to 1. I risk 2,000 to make 3 times that. That's how I look at it. I look at it differently for my options. If I put on $8,000 risk in an option and I make 8, that's 100% for me. And I think that's a good trade, or whatever the amount is you want to risk. Okay. So I just look at them differently. And I also look at my targets differently, because I will hold options longer than I will hold my day trades. And, I like to be in and out fast, because you never know what the market's going to do in the day, and stocks will go with the market, and mostly on any given days. And the market's been wild. It's been really wild. So making money overall is about consistency and correct trade selection, and then not over trading. Okay, we talked about that. Not taking too much risk, chunking it out. You want to increase the odds of your own success by looking what's happening with institutional money and not going with retail traders. And even though everyone here is a retail trader, I hate to say it, but most retail traders do lose trading. they do things that don't make any sense, to be honest with you. And I know this from teaching people now for over 10 years. I try to teach people the best I can that want to come and learn from me and do the class. But if you don't want to learn and just want to sign up for the subscriptions, that's up to you. I think you will do better though if you learn, but that's totally your choice. You can just take the trains. And there are people with me that are having success that have never taken the class. But it is power money that I'm looking at. And again, I rate the gap in the morning using the checklist. This is what you learn in the class. It's where is the money going? Where are we going next? That is extremely, extremely, extremely important, because if you can get in before the move happens, that's where the profit is. And where you get out is up to you. You halvesies it, you get out early, you hold it, it's up to you. Just make sure you get out with money. You know, you don't want to hold something too long. But like the CBX is even a good example of that. I mean, to get in that yesterday and have that gap up today. But I'm very deliberate in my choices. I have conviction in what I'm doing. I'm here. People call me, they email me questions. Even, you know, people that have been clients for years. It's a system I've been using since I started trading. Like I said, it took me 3 years to create it. And I do think if people want to do this for a living, I'm certainly here to help you get a plan of action to do that. As far as the share quantity and size you're going to take, it does have to do with your cash. And as far as a broker, you can go anywhere you want. I have no affiliation with any broker. You can make your charts look like mine at any place if you want. But I do think it's important to put a plan of action in place before you trade. And again, if you're trading this year and you're losing money in the last 2.5 months, you have to stop what you're doing and get a plan of action in place. Just pull out a notebook and say, number 1, this is what I'm going to do next. Number 2, this is what I'm going to do next. Number 3, by April 1st, I'm going to do this. And that will help you do it. If you decide you want to take the class, you will learn my method. It determines the high probability of directional bias for the entire day, a big move. We got to get the big moves, early confirmation, and precise entries with a good risk to reward and follow through. For me, I think it's only one thing that I'll ever do because this works. And I've just added size over the years since I've been trading. I didn't start out doing options. I started doing that about 7 years ago, almost 8. And I never planned to teach people when I created my system, which is one of the reasons I think it works so well. It did it for me. But I found there's a lack of information out there about gaps, and most of what's out there is wrong or incorrect. People are confused about gaps. They don't understand how good they are and how much fun they are to trade. But it's really, really about picking the best gap to play each morning. You only need 1 trade a day to make money. You don't have to trade all day. And in fact, I closed the trading room by 10:15, 10:30 every day. So people are doing really well with me though this year. The truck driver I talked to you about made 35 grand in 2 weeks doing options. He did not tell me how much he's risking to trade, and I didn't ask him. But I mean, that kind of thing is phenomenal. When people are losing and then they start making money, their confidence really turns around. I think what hurts traders is when they go 2 years, 5 years, 10 years, stories I've heard for 20 years, people are trading and losing. I don't know how they keep going. You can't keep doing the same thing that's losing. You cannot. It is just stupid, to be honest with you. And I'm ready to go over the information when my class is. It's March 26 and 27. You can go to the website if you want more information. You can email me if you want a trial for this week. It's melissa@thestockswoosh.com. We already talked about this. I want to bring the charts up here, and I see we have an half an hour. So again, here's the dates of the class. Here's my email. And then here's the special. You sign up by Friday, get the trading room free to the end of the year. The class is the end of the month. And then the options newsletter, 6 months is a long time in the newsletter for $49.99 and 12 months for $69.99. The newsletters are emailed to you in live time. Take the trade when you get it. Targets are on the letter. Now, I think I have to stop screen sharing to go to my charts. Well, I haven't talked to him. I haven't talked to him. I've been highlighting, which is very interesting. I've been highlighting individual people in the emails. And I have been highlighting, like, what did they do for a living? And when did they start trading, and asking them to send pictures of me, which some of them have. I have not asked the trucker for a picture. Again, I think you might get in trouble if I said the company he's working for now. So I think his eventual goal is to retire, from talking to him when he originally signed up. And he hasn't done the big class yet, but I have to follow up with him about doing the class in March. But anyways, people share with me what they want to share with me, but I have been highlighting different individuals who have emailed me their success just this year. And it is interesting to hear what people's plans are or how they are trading or how much money they're making and what they're doing. And it is wonderful to see that people are successful. And it just goes to show you that you can do it. But again, I am calling the trades. So I've been calling a lot of good trades. It doesn't mean that I'll never call another losing trade again. We did lose last week. I called Apple puts. I will tell you, they didn't work. But we pretty much really are not doing that many losing trades this year. And the volatility is there too, which really helps, because obviously you make more when you get bigger moves. How long it lasts, I do not know, but we're certainly going to take advantage of it as long as it lasts. I still have a great system, meaning we win more than we lose anyways. But I think the benefit of this year is we've had some huge, huge moves. Boeing is one of those moves. And I showed you that one market trade, which was even weeks ago now. When you take a trade and something drops and you're in a put and it drops 30, 40, 50 points, I mean, come on, one contract, you're making bank. I mean, it's just, but I will tell you that the cost since January through even now, March, the cost of at the money options puts is like doubled, like seriously. Now, again, I don't know where we're going to go tomorrow in the market. I may decide to go long tomorrow. I don't know, or Monday or something. I don't know. But I have really noticed that the cost of trades we did 4 weeks ago, 6 weeks ago, compared to today, has really shot up like a rocket. And then that contributes to, again, all the volatility in the market has contributed to the cost of things rising, even to trade at the money, but you could do a strike away from it. Okay, I think I have to stop this. So let me just stop this here. And here, email me if you want a trial for the week. I'm going to stop. I'm going to go to my charts. Let's see where we closed. Oh, look at this. We close red. Oh, we're selling off right now. Look. So let's go over today. Let's go over today, right now, today. Again, I was with you people for the last hour and a half, so I don't know what news came out the last hour and a half, but just go back to the beginning of today. Actually, no, let's pull up the 1 minute. This is the whole day in a nutshell. Let me take everything off. This is how wild today was. And I sent out a couple of emails before we did this. Here, let me see if I can squish it. Here, this is the whole day. So we started out the day here, boom. We actually shorted the market here. Some people got out, they were up, I didn't get out. I really thought the market was going to continue lower. I got stopped. So I got stopped in the market today, this morning early. I got back in. The second trade had the follow through that I was looking for. Drop, 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 drop. Had a nice move. Then I got out. First trade I lost, retake worked. Then I got ready for the webinar, had lunch, it was 12 o'clock. Biden talked, it was 11:45. Again, this whole thing here happened and I had the news on. I was watching Fox while I was eating lunch. Ukraine doesn't want to be part of NATO, so the market rallied. So that was this reaction here. Again, I don't make trading decisions based on news, but if something happens crazy, I will say, oh, I wonder what's going on. And then I go, and that's what I count for this pushback. But again, also, take it over here, people were looking to buy into this. So at one point today, this was green. The high today was 333.21 people. That was here. High of the day was 107. So here's what happened today. Again, we just shorted this, we got out. That was the morning. This is what I'm talking about volatility. We did it. We made money. Then this happened. Woo! Then it went all the way up. Then it went all the way down. And I didn't see what was happening here because I was talking. But am I surprised? No. Am I glad we're falling? Yes, because I am in some stuff. Actually, I'm in the market. I'm in the market lower. But the fact is that right now, talked about gapping. No, let me show you this first. Here's where we closed. Right now, we're here. So the market's gapping down live tonight. That's a real gap. It's about 2 points, I think, or 1. Where did we close? 3. God, look, this is just selling off here. I think it looks like we closed at 323.35. 323.35. So we're just selling off here tonight. So we're gapping down the market. I don't know where we'll open tomorrow, though, and I don't worry about it until the next day, because why? This market's so crazy. Tomorrow we could be up. Tomorrow we could down be more. Tomorrow we could be back at 333. So I just look at it in the morning, but I will do overnights and things and stay in something if I think we're going to continue, which is my analysis here. But today was a wild, wild, wild day. Another reason why you must take profits. You must take profits. There's something else I was going to say. Oh, BA. Oh, no, CVX. Let me look at how that closed. Yeah, 174. So dream target in this was 175. It almost got there. But again, this looks like this is just not doing anything tonight. Let's look at the BA. BA is gapping down, not a lot, 172.50, closed at 173.80. Let's look at Apple. That's the one we did lose in last week. Just didn't want to go, didn't do it this week, laid off of it. It did fall this week. Here was the Apple Monday, Tuesday. Today is Tuesday, tomorrow's Wednesday. We didn't do this. I said, screw it. This thing bit me in the butt last week. So this is the one I lost in. It took till Monday to go. Kind of sucked, but anyways, going back to what I was saying about the market. Actually, no, let's look at the SPY. We're at 414.71, closed at 416.25. Looks like we're back near the lows. Any questions here about anything? Why have the market up? What a wild day. And what a nice read by me of this here. So we'll see where we go. But again, it is extremely important to know what you're doing in this market. I honestly think you should know what you're doing in any market. But 2021 was a year where you could have bought the dip and everything, even stocks that were down and in downtrends, and made money, and you didn't even have to think. And I think people got lazy with that, but you should always know what to do. And if you know what to do and it's an easy market, guess what? You can do well too. So if you know what to do, you can do well in hard markets and easy markets. I personally don't find this market hard. I think it's been an easy read for me. That being said, it doesn't mean I don't have hard days. I do have days that are hard, but overall, trading isn't hard anymore for me because I'm so experienced doing what I do for as long as I've been doing it. And personally, this move the market has had this year is not unexpected to me. I thought 2021 was unexpected. I was really surprised how we pushed back from those COVID lows as much as we did, given the unemployment rate. And again, I'm talking about once we started to open up from the summer of 2020 into the end of 2020 and then into 2021. It was really astonishing to me how much the market kept going under the face of bad unemployment data, which happened for a long, long time. But now we're in an environment where everything's coming together, rising interest rates, inflation, like we talked about, the possibility of a third world war, God help us. All of these things are coming together and the market is reacting. I don't have any specific things really that I'm in love with. I have things on here just because I've been trading with charts like this since I started. So I'm kind of like in a groove here. But if I took everything off, you'd be better off not using anything really, Teresa. I think people live and die by their indicators. I'm going to take everything off here just to show you. I could still trade if I looked at that every morning. Why? Because you can still see the gap. There it is. This is this week. Let's go back to Friday. No, yeah. Thursday, closed here, fell, gap down, fell off a cliff here. This is 3-4. Gap down Monday, really tight. That was the day we talked about power trending, remember? High on Monday, that was only yesterday, people. That wasn't a million years away. That was yesterday. 43230, low was 419. I don't need any moving averages. You don't need anything at all. Look at the gap. In fact, the gaps are a lot clearer here actually than what happened today. We closed, we gapped down. There it is. Let's go look at the SPY. Less is more. Less is more. Oh, that was the SPY. Sorry, let's go to the Qs. Less is more. Again, the leaning into these indicators, the reliance on the indicators, buying on the moving averages, buying on support, shorting, leaning into that. Trading is not black and white in the sense that you should always go long on a moving average or you should always do. It's not like that. It's not like that. And you're seeing that now. You're seeing that now in this market, but it never is really like that. Where do you find perfection when you live in the gray? Like I just explained to you that I look at 26 things on a chart to decide if I'm going to short the market, go long it, or do nothing. You say, my God, 26 things, that's a lot. If I could look at 126 things so that I never lost in a trade, then that's what I do. So again, it's you're living in the gray. When I rate something, if it rates 22 points, that's over the cutoff for me, which is 20, but a gap that rates 24, that's obviously a better gap. So if I'm only gonna do one thing, I do the higher rated one. You're living in the gray. This is analysis. It's called calculated risk when you're trading. We were talking about taking risk. This isn't risk for risk's sake. It's calculated risk. You calculate the risks and say, this is a high probability of dropping. I'll just tell you right now, it's a high probability the market's going to drop tomorrow. I don't know how that sets up. What do I mean? We could gap down tomorrow and that's the drop. We could gap up and fall and drop. We could open neutral and drop. I don't know how it sets up. High probability the market falls tomorrow. Again, could we reverse and rally and go all the way up and fly high? Sure, we could, but that's low probability, low probability. So again, I'm in some stuff to the downside. I may get out of it in the open tomorrow if we're gapping down. But anyways, I don't know what day trades I'm doing tomorrow, but I'm telling you that trading is about probabilities. And you shouldn't rely on any moving averages. Look at all the gaps here. You can see all these things. When I used to go to Fox, which has been for over 2 years now because of COVID, and I used to have to talk about stuff and I didn't have my charts with me and I only have my phone, I'd look and I'd be reading the tape. I'd be like, okay, I can see where the market is. I see where it opened. I see where it closed. I see where we're at. I'd have to talk about it. Get off of your reliance with indicators. I have to take a sip of water. Hold on. You've never been a believer in the buy the dip chatter. The market's been going down since December, right? The last time, well, not in the SPY, but in the Qs. How do you know when the time to buy the dip? Well, again, I'm never buying the dip. So the time is never, that's the time. Now, as far as the market goes, if you're saying to me, when is the market going to go back up again? If that's what you're saying, let me get this one over here, make this a daily. If you're saying, Melissa, when are we going to turn around again? That goes back to what I was saying to you before. Here's the whole thing back since 2016. First of all, we're not in a downtrend, according to Melissa Armo. So we're not in a bearish market. If you're saying to me when to go long, where would I go long the market again? Well, that will change because tomorrow will change and then Friday will change and Thursday will change. I can tell you right now today where I'd go long. If I woke up tomorrow morning and rolled out of bed and the market was at 360, I'd probably go long the market. Is there a chance of hell that happening? No chance in hell that happens. So that's not going to happen. But if it happened tomorrow, I'd go long and I'd lose in any puts I'm in. That's not going to happen. No chance in hell. But is that number going to be the same for me forever? Tomorrow, Tuesday, a week from now, 3 weeks from now? No. Again, things are fluid. Things change. There's no black and white. Has nothing to do with the moving averages or anything else. So the reality is that I don't know when the market turns around again, if that's what you're asking me. It's like trying to predict who's going to win the 2024 election when I don't know. It is a lot easier for me to tell you that it's a high probability that the market will continue lower tomorrow or between now and Friday. I can say that with a certainty. But at the end of the day, longer term, it's harder to see where we're going to go because you don't know, because there's too many things to predict that could affect the overall market. That is why you must take profits in trades. Now, if you say, well, Melissa, I have a 401k, just like I told the hairdresser, I said, well, if you're not planning on retiring the next 2 years, what are you worried about? There's nothing to do. If you're in retirement or you're planning on retiring next week, well, that's a different story. You know, you're a little late to sell here at this point. Could we still go lower there? Absolutely. 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 Just like BA, people said, oh, I still can't go any lower. Really? It dropped 10 points from the time that person sent me the email. And I don't know if they did those at 180 puts or not. It went and dropped 10 points plus. So it's very difficult to predict what is going to happen the longer term out. It's 4:50. If I said to you, what are you going to have for dinner tonight? It's 4:50 Eastern time. You could probably tell me what you're going to make for supper. You could probably tell me what you're going to make for dinner. I can tell you, I'm going to have chicken Parmesan. I made it over the weekend. I have one more chicken left. I'm going to eat it tonight for dinner with a salad. That's my dinner. I can tell you, as soon as I'm done, I'm going to have dinner and relax. My day is done. If you said to me, Melissa, what are you going to eat for dinner next Tuesday? I want to know. Say, I have no idea. I have no idea what I'm going to eat next Tuesday for dinner. I am not even thinking about that. I have no clue. Do you understand? And that's only a week away. And you want me to tell you where the market's going to be in a month? And I can't even tell you what I'm eating for dinner in a week. So do you know what I'm saying? Let me see some questions. Something else I was going to say. We're talking about reversals. One thing I will say, whatever, now just listen up. This is important. One thing I will say, whatever you think it's going to be is probably not when you think it's going to be. The market's tricky. Again, for me, this has been an easy read, but again, what goes down must come up. What goes up must come down. So whatever you think is not going to be what you think it's going to be. I don't know if that makes any sense. So again, all the people that are trading with me right now and all the people are making thousands and thousands of dollars. Some guy made 100 grand the other week. Again, I don't know what he was risking. But the fact is, you know, and I don't pry. People have different accounts and whatever, but we are actively trading. There's a lot of trades. The fact is, and you can do them all if you can afford to. The fact is that you have to take profits. You have to take profits. You have to take profits. You have to continually take profits. Well, there's nothing wrong with holding, like if I call 6 trades and they're all up a lot, should you hold them all 6? No, because something could turn around on a dime. So book 4, hold 2, book 3, hold 3, or whatever you want to do. Do you follow what I'm saying? So whatever you think is going to happen is not going to be what you think. And like today they came out and said, doopa doopa doo. Ukraine doesn't want to be part of NATO now. They don't even care. So immediately the market rallied and said, oh, Putin's going to stop the war. No, he's not. No, he's not. No, he's not. So again, then we fell off a cliff again. I mean, I don't know what preempted this, but I know, like, as soon as I saw that and I said, well, this is very interesting. This was after I got out of the day trade. I was like, oh, this is really crazy, this market. And again, you have to buy the dippers. They're there all the time. But the funny thing is that, like, again, whatever you think is not going to be what you think. So you might think that this is the end of the drop. It's probably not going to be. And when we drop again, you may think, oh my God, it's the end of the world. It's the end of the world. It's the end of the world as we know it. We're never going to go back up to the high. And then it turns around. So, I mean, whatever you think it's going to be, you don't know. And I don't know. And I don't know until I get up in the morning and I rate the gap. So I don't know. You're asking me if we are going to have another gap down. I don't know. You're asking me if we're going to have a gap up to go long. I don't know. And I won't know until we see it. But if tomorrow morning you wake up and the market's at 360 in the QQQs, rest assured, we will hold that gap and we will rally. I think it's hard pressed to make a new high at this point, but we could certainly have a rally. You could go long. but that's not going to happen. There's no chance in hell that happens tomorrow morning. What else was I going to say? We're talking about momentum. Forget. You know what I haven't looked at? Let's look at Tesla, because I haven't looked at that. And we're not in anything of this. So I just stayed away from this. We had 2 big trades in this, and then I just kind of stayed away from it. This is another thing that it's super duper expensive. You got to get it at the right time. Super duper expensive. And you got to get it at the right time. I've not called any trades in this week. Let's look at it. Any other questions here? This looks like everything else here. So this actually is stronger than the market right now. Look, so this is down tonight too. This is down tonight too. Everything is. It's at 819. But this here actually closed green, unlike the market today. This is a strong stock. This is a strong stock. It's a strong stock. People love to go long it. We did have 2 nice shorts that we did. It was this week. We did the 850 puts and the 800 puts, and they were huge trades and they worked. I haven't touched it since then. So we'll see. But this closed green today and the market didn't. Now it's down tonight. It's about here. It's a little baby gap. But that was stronger than the market today. So anyways, trading is interesting. I think that people do it for fun, but I think it's something that is fun, but should be taken seriously. That means a level of commitment, not only depositing money in a broker to trade that you're risking, but also if you want to learn what to do, learning from someone or paying for a subscription service. I do think it's something that I've always taken seriously, which is probably the reason for my success, but it's not easy when things happen that you don't want to happen, that you don't expect. So the best thing you can do for yourself is just get up and look at every single day as the day that you're alive, and you trade and you make money, and that's it. Don't worry about tomorrow. Don't worry about the next day. Don't worry about the next day and the next day and the next day. If you are holding overnight for trades, you take profits as the trades go along. You don't have to hold overnight at all if that makes you feel uncomfortable. But I think one of the benefits of doing options is holding overnight to get bigger moves, but just back off your risk if you're in a position where you are not certain of yourself. And I think that that's part of what people just are feeling right now, this level of uncertainty, not knowing about the future and having things change in the world. But if you didn't learn anything from 2020, learn that things can change in a dime. They can change in a dime. And in fact, I wouldn't be the least bit surprised. Today is March 8th. What was the day that we fell off a cliff? Let's look at it right now. It's the last thing I'll say. I'll let everybody go. What was the day we fell off a cliff? It was 2 years ago. Is it this week or next week? It's soon. My God, that's tomorrow. Oh my God, it was tomorrow. It's March 9th. It's tomorrow. So we're probably going to sell off tomorrow. It was 2 years ago. It's 2 years ago. Listen, thanks. Great presentation. Long talk. I'm going to eat my chicken parm. Thank you, David. Thank you, everyone.